Hello everyone, and today we are here with the topic of Fibonacci and its uses in trading. We will be actually taking a look at how we can use Fibonacci extension and retracements in our trading and get some nice levels to get mark our entries and exits. So, without any delay, let's start. So, first of all, we will have an intro to the mathematician who actually gave us this Fibonacci sequence. So, his actual name was this Leonardo Bonacci, and he gave us this sequence of Fibonacci, which is like 0, 1, 1, 2, 3. So basically what is happening here is so the 0 and 1 are initially fixed, and then the next term is derived by adding the previous two terms. So here 1 is derived by 1 plus 0. Then the next term 2, how 2 is coming? It's by 1 plus 1. The preceding two digits will be added. Now 3, how 3 is coming? It's by adding 2 and 1, we are getting 3. So that's how a complete series of Fibonacci is derived. And we can see various things like a spiral can be made out of Fibonacci, like you can see in this figure. So it's a naturally occurring sequence. Uh, so traders also believe that it's also there in the market psychology and all. So Fibonacci is very useful for that too. And so here we got it. Then we have got the origin of series. So we actually got the explanation of how this series is formed. Like the term is actually the sum of preceding two digits in the series. So that's how we got the series. But how do we got the percentages that we get in Fibonacci? Like in the charts, if you will apply Fibonacci here, if you will go to this, then this one, Fibonacci retracement, if you will apply it, then you will see we have these numbers of 0 0.382, 0 0.5, 0 0.618, all these. How do we get that? So if you will closely look at the series, it's 0, 1, 1, 2, 3, 5, 8, 13, this and this. So if we go to calculator and let's just take this 34. So if we go to 34 and divide it just by the next succeeding digit in the sequence, like here it's 55, then we are getting 0.618, and if you will convert it into percentages, it will be 61.8 percentage, and that's where we got our golden ratio, that is 0.618. Okay, and similarly if you will go to wait just a minute, calculator, and if you will have 34 divided by and skipping the next term and going to 89, then you will have 0.382, and that's your second ratio here, 0.382. And similarly, if you will let us suppose we take this time different number. This time let's take a different number. Let's take 8 and 34. 8 divided by 34, you will get 0.235. So here is your next ratio, like it's 0.236, so it's almost the same. So that's how we get our percentages or these unique Fibonacci ratios in our trading system for extensions and all. So that's about the origin, and here are actually many Fibonacci tools you will find. Like all these are Fibonacci, Fib fan, Fib wedge, Fib time zone, all these, but you don't actually need them. You can just use Fib retracement and trend based Fib extension. So I will just show you how to use them in later sections. So let us find the retracement. So here beautifully we have found a retracement, like how to plot. This is called the Fibonacci retracement, and to plot it you first have to go, like if you are plotting a downtrend, then you first have to wait, let me first delete it and show you like this. So if you have to plot a downtrend, then go to the high where the last high was formed, then take it to the down which is formed here, and drag it to the recent chart which is already drawn, and just keep the low here, which is the recent low. So yeah, this is our retracement, and you can see like we got these levels of 0.786, 0.618. These are all golden ratios which we use in our fib trading. So as you can see, after this momentum, these are the levels where up till which the price can retrace and follow or continue its downtrend again. So it can either go here and retrace from 0.236 levels, 0.382 levels, zero point 0.5, 0.618, or 0.786. So in this case, it has retraced from 0.786, and each level is having its own importance, like this ratio 0.5 to 0.618. This is called the golden area, and retracement from here give us nice targets, and uh, almost a nice risk to reward ratio too. And if in a trend you get some retracement like 0.786, then you should not expect too much returns, because you can see that the movement was this one, but it has retraced around 75% of its momentum. So you can see that bears were powerful, but they were not powerful enough to throw the market back from zero point 0.5 or zero point 0.3. Like, they were not enough powerful to stop this retracement from here only. They let the market run up till here 0.75%. So it's still a trend continuation signal, but you should see it in this perspective. Like, if more the retracement, the shallower will be the next trending move. So this is your Fibonacci retracement. And if in case like if the price was not even stopping at 0.786 levels, and it crosses the one, then what will be your target? You will start your trade of opposite side here, like it was a downtrend. So this time you will go long in this after it crosses this price, and your first target will be 1.618, which you can see here. So this can be your first target, and the second target can be these consecutive ones, which will come eventually if this level gets broken. So that's how Fibonacci works, and that's how you can get levels from Fibonacci retracement. And if the trend fails, like this downtrend fails, and price comes back to this square one, then you can target for these levels, subsequent levels. These will be your targets. So now let us leave Fibonacci retracement, and let us see what we have got next. We have the next tool, which is Fib trend based extension. So here we will do it like this is a downtrend, and this is the chart that we can see. So we will take it from high, then mark to low, then the maximum peak it has retraced to, we will mark it like here. Up till here it has moved. So this is our retracement, and while it will move here, and we can see, if we go downside, then what should be our target? You can target for this one level, which is here after the retracement is done. Then the second target can be the 1.618 levels. So that's how you can mark the levels after the trend is continuing. Like Fibonacci retracement will give you the levels on the upside if the trend fails, and you get in the opposite direction of the trend. But the this tool, trend based fib extension, will give you the uh, next targets in the continuation of trend. So that if the downtrend continues, then these can be your subsequent targets. So you can actually see the future from here. So you can see the retracement, and we have also seen how to predict the future prices. Like, these can be your future targets, and in the retracement they were on the upper side, starting from 1.618. And remember, here we got starting from 1 and then 1.618, but in retracement we got directly 1.618. So that's a point to remember. Now Can I use it in scalping? Like here I have used it in 4 hour chart. Yes, you can definitely use it in 1 minute charts too. It's just that you will get much more of a noise in your trading, so it will be much more difficult, and uh, actually your stop losses will be harmed many times, but still you can use it like that. So let us try doing it. Mm. So suppose this is going on, okay, and then this low is broken, then uh, as soon as this low gets broken, you will go to your favorite retracement tool, and here you will mark this and go to this high, okay, and it took a nice support from this point 0.5 and this golden ratio area which I told you about, 0.618 to point 0.5, and from here you can see it went nicely upside, okay. So that's how you can go this side, and to get these future levels, like we have this point in how to predict the future prices. You can actually use for continuation of trend, you can use this tool which I told. Like first you will get here, now you will get here. So up till here we got the retracement, so let's extend it here. So that's how you can get your targets. So up till one level you got your targets, and after that I think, okay, market showed nice retracement, and that's how it works. So it's a live example. I don't know how I got it. It's 1 minute chart. You can trade it, but yeah, it will have too much of noises. It will work wonders in 15 minutes or 5 minutes onwards. It will work very good, I think. And personally I don't it too much, but uh, I don't use it too much, but yeah, I have used it in some point of my time and it has worked good. Currently I just use price and volumes to trade, and that's what I want to focus on. Sometimes, very little times, I use Fibonacci, but not most of the time. So if you will look at these figures, like let me switch it to 1 hour chart. So now this is the high and this is the low. We marked it. Now you can see these numbers are very weird. Let me switch it to the right side. Hmm, visibility, style. Not on the left, it should be on right. Yeah, now it will be visible to you. So these numbers look quite confusing to us, like 0.236, 0.382. So what you can do to simplify it is you can simply go here in settings. Uh, Instead of these complex number, you can divide the complete move into four equal parts, like four quadrants that we have used, four quarters, like 0.25 level. Then you can switch it off. 0.5 level, it's already there. Then you can have 0.75 instead of these complex numbers. So, okay, see, instead of complicating it too much, you can simply just do it like this, and now you can see how it can be useful in the trading world. So let us see some example of it. Hmm. Okay. Hmm. Trend continuation is here. So let us see if it has retraced to our one-off levels or not. It's just a testing. If oh yeah, yeah, option F. Let's see if it's 0.25, zero point 0.5 or what. I think it's more of 0.5. Option F. Okay, we just reached around zero point 0.5 and then we got a nice down move. So that's how we actually get a move in a Fibonacci, and you can actually use it in this simple way, like just divide it into four equal quarters, and then you can see it went here, then it went here, then it took nice resistances from 0.25% or 25% of the move, and then it showed a nice move, like remember what I thought told you earlier, Like if this was really the full power of bears, then it will not let the market retrace too much. Like earlier we had a retracement of 0.75%, so that's not a sign of a healthy trend. It means that the trend, that downward trend, it's soon going to exhaust. But if the retracement is just by 50% or by 25%, then the move will be fierce and the trend continuation is likely to happen. So I hope you got it. And let me tell you one thing. So let me delete this. So if you will look at this chart, so what you can analyze from here is, so it took a nice resistance from these 0.75 levels, and now it is likely to continue its trend, but that will be shallow, I guess. It will not be that much broad downward trend, and you can likely see some kind of sharp reversal or short squeeze type of thing, because the bears were not too much stronger here because they let the market retrace to 75%. So that's not a sign of healthy trend. So I think you got too much information to handle, and I hope you will practice it on charts and learn it more. So that's it for today. Thanks.